this. Ajay Bodke, Head of Investment Strategy and Advisory at Prabhudas Lilladher, joins us now. Ajay, thanks for joining us. You heard what the analysis had thrown up from the companies and brokerages, but I'm going to ask you one basic question. This industry has been clamoring for some kind of, SOPs, some kind of protection, and the government seems to be moving in that direction. But is the problem the fact that they've only chosen, as reports suggest, hot roll coils, one category of product, and is that going to, perhaps skew things, and is that why the worry is?
Good morning, Mini. I think the proposed imposition of 20% safeguard duty by the Director General Safeguards on HR coils for 200 days, I think the proposal is yet to get approval from the Ministry of Finance. And our sources tell us that the Ministry of Finance will ask for data, study it for 30 days, and consult the other concerned ministries like the Ministry of Commerce and the MSME ministries, seek their views, and only after a proper conclusion that they reach will this duty come into force. What will happen in the interim is that this will scare some importers into reducing the imports, and for the time being there might be some relief that the companies could possibly enjoy. However, I think we are also given to believe that if you look at the proportion of imports that India has vis-a-vis Europe and America, where we have 15% and 30% respectively total imports, the Indian imports constitute only 13% in the category that you just mentioned. And only if you add items that are not made in India, does that rise to around 30%. So there is a school of thought that the case that, based on hard data will be very difficult to be justified, and hence we got to wait it out and see the ruling that the Ministry of Finance comes to at the end of 30-day period. So I think clearly there is pressure on the government to give some relief to steel sector. And also, let's not forget that steel has overtaken infrastructure as the sector that constitutes the largest problem assets for the banking sector in general and public sector banks in particular. And hence, there is a palpable sense of urgency that the government feels for a relief to be given to the steel sector.
Right, that's an interesting point, Ajay. So what is your hypothesis? If it is at the initial stage, should the government be looking at a wider range of imports and not just hot roll coil? And could there be a reason to believe that just one product could skew the marketplace, as I was asking you earlier?
Yeah, no, as I said, the steel industry obviously would like a far wide-ranging basket of products to come under the safeguard duty. However, I think because there are certain agreements that the country has signed with some of the largest with the countries that export some of the large quantities, countries like Japan and Korea, where we have a preferential trade agreement, and these are the countries, along with China, of course, where a lot of imports are coming from. So one will also have to navigate very carefully some of the provisions that these treaties have. So it will not be that simple for the government to just go ahead and impose these duties simply because the global prices have come up quite sharply. And the Indian players which traditionally had an advantage because of domestic sourcing of iron ore are today finding that that advantage has been eroded. So I think the issue needs to be considered from a holistic perspective, because the user industries also are clamoring that why should they not benefit from the global plummeting steel prices, because they will be passing on those benefits to end users.
Sure. In fact, post this report, which is really just a suggestion and a proposal, we've had brokerages come out and come with very clear takes on this in terms of who this is positive for and who it is negative for. JP Morgan, for instance, says it's positive for Tata Steel, Steel Authority of India and JSW. Is it too premature to say, Ajay, that it's going to benefit these companies and hurt these companies? How would you look at the steel basket basis this safeguarding news itself?
Yeah, as I said, I think it's too premature for us to jump to a conclusion. Let's wait it out and see what the Finance Ministry pronounces after 30 days, after consulting Ministry of Commerce and MSME. And overall, I think on the global cyclicals, we are negative. Our preference remains with domestic cyclicals like autos and cement. And steel and non-ferrous is a sector where we are advocating investors to stay away from till such time that there is some amount of stability, semblance of stability that returns to the Chinese economy, because China is the largest producer of steel and other non-ferrous metals, and also one of the large consumers. And hence, till such time that the Chinese economy picks up steam, the danger of large-scale imports coming into other markets remains an overhang on Indian steel stocks.
Right. You know, Ajay, there's also been a news report that Steel Authority of India has hiked prices by about 500 rupees per ton this week across all products. Now, does this indicate in any way that there is an improvement in demand? You've spoken to both producing companies and user companies. What's the picture on the ground in terms of demand right now?
Yeah. So I think, overall aggregate demand, we are expecting to pick up in the Indian economy over the next quarter or two because of massive front-loading of capital expenditure that the government has done. Just two data points will bear it out. If you look at the plan expenditure on capital account, that has gone up by to around 51,000 crores, which is upwards of 80% growth on a YOY basis. And if you add the capital expenditure on plan and non-plan at around some 83,000 crores from April to July, the latest numbers are available, it is up 39%. So the government is making its efforts in front-loading capex. Railways have spent 17,700 crores in the first quarter, which is a whopping 134% growth over the same period last year. And road sector, nearly 4,100 crores, 4,100 kilometers of roads, what 41,000 crores have been tendered out till end of August by the government, with a total target of 10,000 kilometers of roads, equivalent to 1 lakh crores in this year, vis-a-vis only 8,000 crores last year. So I think as we move forward, the trickling down effect of this large government spend will be felt on infrastructure industries like cement and steel, and hence the aggregate demand situation will improve as we go forward in the second half of the financial year.
That's an interesting bit of analysis, Ajay, because it really does indicate that there might be hope after all for these companies which have been so badly off. But hold your thoughts. I'm also going to get my colleague in Mitali, who's been tracking why ICRA has downgraded JSPL to a negative outlook. Mitali, take us through the concerns that ICRA has cited for this.
Well, ICRA has assigned negative outlook to the long-term rating of Jindal Power, and the main reasons behind the downgrade is moderation in financial performance in the first place. Secondly, problems with the availability of coal. The deterioration in the credit profile of the company and its parent JSPL that we were talking about has also been factored in. ICRA has also revised ratings in the short and medium term. During this period, they expect pressure on profitability as the company will have to procure coal from other sources. And in the medium to long term, the financial condition would depend on the coal block decisions, particularly on how it affects the company's ability to enter into power purchase agreements. Sourcing of fuel in the long term also remains an issue still. Having said that, these ratings continue to be on watch and could change with developments related to fuel sourcing arrangements of Jindal Power. Sourcing for most of its capacity, though, is still not certain.
Right. Ajay, what is interesting when you look at the steel companies is that, pretty much in every quarter they have a problem, be it from dumping, be it from lack of demand, or be it from debt. And I'm going to take the debt piece first. The books of most companies are looking pretty bad. It's had a cascading impact on the banking sector. Financially, what are the repercussions of this long period of crisis for steel companies, and how are you viewing it when you're viewing the sector? Because these stocks have fallen to, abysmally low levels.
I think quite a few of these companies will have to go back to their lenders and seek relief under the 525 scheme. A few of them already have done it, and some more, in our opinion, would be on the way to find relief, by getting their maturity of repayment stretched, and also some forbearance on the interest in the first few initial years till the aggregate demand in the economy picks up. So I think, as I said, this is a global cyclical commodity, and unless there is some semblance of stability on the global prices, I think the pressure on the Indian companies will continue to increase. And the only alternative that they have is they'll have to try to reduce and contain their costs. But beyond that, I think they're completely at the mercy of the global headwinds that they are encountering.
Right. In this circumstance, if you had an option, would you buy in this sector at all? Because one could also argue that these are companies which are too big to fail. And, there is going to be an eventual pickup in infrastructure spending and demand in India. Would you play the contrarian at a time when the mood on this sector is so bearish?
I think here again the investment horizon for an investor comes into play. If one is an insurance company or a pension fund that does not have quarterly pressures, performance pressures, but can take a genuinely long-term view, a medium-term 3 to 5 year view, then certain select pockets in both ferrous and non-ferrous sectors, companies as you mentioned which are systemically large, which have over the decades proven ability to sort of weather the ups and downs, are the ones that can turn out to be multi-baggers. But then I think one will have to bear the pain in the short term by buying these companies.
Which are the companies that you are recommending to really long-term investors, Ajay?
Yeah. As I said, our stance currently is that global cyclicals should not be favored, and it is domestic cyclicals that should be favored.
Okay, we leave it there, Ajay. Thanks so much for joining us. Great to have you on the